Hey everyone, so if you clicked on this video, you're looking to learn how I do my weekly pre-session markups. The idea behind this is before every week begins, on Sunday market open, one of the things that I do is as I wait for Asian session to end and 2 hours before London begins, I like to do my markups. Now, I'm in the Pacific Standard Time Zone, Pacific Standard Time, UTC 8. So my trading time frame is 11 p.m. on Sunday to 2 a.m. on Monday. So I trade about 3 hours on London session. Most of the time that's all I'm trading. And so for me, it's really important to understand what price has been doing. Now I will do my markups for the prior week and basically outline everything that I can see on the weekly, daily, for every swing that I can catch on every time frame. The whole idea behind this is what I'm doing is I'm refining every higher time frame level because I want to understand what exactly price is doing in the most recent swing leg. And the idea behind that is I'm going to be using the weekly and the daily for my directional bias to give me an idea of what we have been reacting to and what my expectation for this overall week is going to be. Whether I'm expecting continuation, reversal, corrective pullback, or just continuation for a new break of structure. Whatever it is I'm expecting, I use the higher time frame. At the same time, I use the 4 hour as my higher time frame market structure because the 4 hour is going to be really well developed within the upcoming week. So we're going to get several candles in the 4 hour, and I refine most of my point of interest to the 4 hour. I then use the 15-minute as my medium time frame analysis. I use that for market structure so that I can get daily intraday swings, right? And I'll refine all my entries. So I'll refine from the weekly to the daily. From the daily, I'll select my best chances with the 4 hours. And then at 4 hour, I will refine down even lower. So if I can get a 15-minute point of interest, that's what I'm going to refine down to. If it's not visible on the 15-minute, then more than likely it's not going to be a valid entry, and I might even go lower to try to see what I could be missing. And I'll refine down oftentimes even to the seconds. I'm going to show you how I do that. I'm going to show you what I'm looking for. We're going to go over point of interest selection, refinement, understanding, justifying reactions. This is going to be a really good video. Now, if you want to learn more like this, I'm going to make tons of videos. And what I also was requested to do is I've been getting a lot of messages asking me to make a Discord. So my whole goal behind this YouTube channel is I plan to just make videos to help people. I want to improve myself as a trader, and I want to help other people understand the things that I couldn't learn through other people's courses and that I had to learn sometimes through my own studies. And so I'm going to be going through pretty much all the stuff that I do. I've made a small Discord. It's free forever, so anyone can join. I'm never going to be charging for any of this. This is just me to give back. As a trader, I believe that your income should be sourced from actually trading. And if I was making money off of selling courses, it would be kind of ridiculous because at the end of the day, what else am I trading for? My income should come from this. So, everyone has their own thing. The idea behind this Discord is I'm going to be showing the cheat sheets that I use that I've created myself with my strategies, my ideas. I have free coaching lottery that, every week I'm going to give away a couple hours, a couple sessions. So if you want to get help with some of the stuff you've seen in my videos and you want to get further one-on-one help, you're going to be able to do that. And so sign up, join the Discord. Link is going to be in the description. Feel free to join, share with friends, whoever, whatever. That's it. That's for you guys, right? So, well, let's get into it. So first things first, I really want to understand what's happening on the weekly time frame. So here we are on the weekly, and if you get lost at any moment for what time frame we are, look down here at the bottom of my screen. You'll see that I have the time frame list below. So I'm going to zoom out. I want to get a big picture of this. Euro US dollar, what am I seeing? I'm seeing that we're in a pretty strong bearish trend, and it looks like we've been doing that since 2007. Kind of ridiculous, hasn't it been? Right? So the euro has been on the drop, and that means that the dollar is getting stronger, right? Euro down, US dollar up. So currently right now, what are we looking at? Am I really going to be paying attention to price 10 plus years ago? Not really, but it does give me an idea of what price has been doing and what's possible, right? So look at how aggressive this drop was. Prior to that, what did we think the floor was? This used to be like what the floor was, and then we saw that we really dropped price a lot lower. So when we see stuff like that, just don't get discouraged. A lot of times, things that you don't think are possible, you'll see them on the higher time frame and realize that, we really could experience something like that again, right? So for me, what I'm really focusing on is the most recent development of price and what the most recent leg is, right? So here I am, and what do I see? Well, most recently it looks like we're on the bearish. We're following bearish order flow. We're making new lows, breaking structure to the downside. We can see a very aggressive push that we've had. Most recently, it looks like we've had a good pullback, and we might break structure to the upside, but who knows, right? I don't have a bias. I'm developing one right now as we speak, right? So I want to see, well, what caused this reversal in price? And the trick is look left, right? So if I take my handy tool here, my little box tool, I see that here it looks like we've created a supply range, right? So this area here, we've developed a strong supply that has pushed price lower. And in fact, what this looks like, if we look to the left, is we also have another supply range here. And I don't necessarily need to really refine this right now. I'm just trying to get an idea of what price is doing. What this looks like is that this mitigated something to the left. And if we look, what we have is, where was the initial push? It looks like we had a sweep of the lows, and then since then price has been pushing up. We came back to mitigate this level. We failed to break out. So what's the expectation? We're pushing back lower and making a new low. Well, we've had that push down, and you can see that we have very corrective push down in price here. In fact, every supply is almost being mitigated to the T, and we continue to break structure to downside. So to me, that's very corrective buildup of liquidity, and I would say that's manufactured liquidity. So that's something that I'm expecting is going to provide almost no resistance to go, right? So in this case, the move down is pretty slow. So to me, that shows me that the market, although it's bearish, it's not very strong bearish. So what I do see is that we've had a impulsive leg push price to the upside. And this looks very aggressive to me. This looks like something that would absolutely be capable of creating a new high. But what did we fail to do? Well, we have this entire supply range here that we've tapped into and then reversed. And if I wanted to refine this, let's say if I'm looking here at this supply range, right? And if you understand ranges, my last video or 2 videos ago, I made a video about ranges. So you can use that to better understand exactly what's happening. But what do I want to refine to? I look at usually like the last buy to sell or the sell to buy, right? That gets engulfed. In this case, I can see that we have a buy candle here that's pretty small. It swept the one prior to that. But then this last candle just before the drop actually swept that buy. And so this leaves behind a long wick. And then we push price down. We have this low. This wick does what? Buys, closes, opens a new candle, and it engulfs to the sell. So to me, I actually might refine to the last candle. And that one looks pretty clean to me. Now it's a whole weekly candle. It doesn't matter if it's super clean, right? And because it's a weekly candle, I want to make sure I know what I'm talking about here. So I'm actually going to label this with a W. Let me turn cap locks on. There we go. I want to make this sizable so that it's clear. So to me, that's the weekly level. And so now I'm looking at 2 things. Well, this supply pushed price lower. Obviously, we have an extreme here. This extreme is a demand zone, right? Or a demand range in this case, and has pushed price higher. This area failed to break the highs. And because of that, that tells me that the extreme or the origin of that move does not have enough volume or orders to push price higher. Now, absolutely, if we really look at this, this was back 2 years ago. So is this really relevant? It's not necessarily super relevant, but we absolutely can expect any type of interaction or any type of reactions to these areas in the future, right? Because something was decided at that moment to take price in a direction, we had some commitment there. So there's likely to be some reason in the future to react to it. So this area, to me, in my opinion, on the higher time frame, I would like to see the low go. Now, it doesn't mean that that's going to happen. I mean, we're talking about probably over 1,000 pips, 800 pips. That's ridiculous. We're not trading the weekly time frame, but I want to understand exactly what's happening, right? The more that I understand price, the better I have an idea and an expectation of what's possible. And that's the whole reason. right? So when I look at the price as it came into this weekly zone, and all we see is wicks in this area, and we see a clear rejection, what pushed price into that zone? We have obviously the extreme, but we have many pauses before that happens. Just before that, we do have this. This is a demand range. Here we built an accumulation of orders that took price higher. Now this area failed to break structure to the upside. So absolutely that means that this demand range is weak. While it did break out and internally created a new swing high, it failed to take out this supply range. So that tells me that supply is in control on a weekly time frame. And that matters to me a lot because that's giving me directional bias. We've already swept this level, and as we swept this level, we didn't really have any more reactions. We just fell through the floor. We had a pause here, same way we have another demand range, and price did what? We had another distribution, price pushing to the upside, very corrective buildup of manufactured liquidity that provided no resistance that got swept. And here we are, we reacted to something here on the leg that's a sell to buy wicks that got engulfed, that broke out of this initial structure, right? Now we don't want to get too complicated, but we're just trying to understand, right? So here we are, we have this reaction. So this pushed price lower. So I would like to see this wick, and I want to see this as a strong supply because it is responsible for carrying price lower. And I'm actually going to label this, and I'm going to mark this out as a weekly level. Once again, so I'm going to make sure this is the proper size just so that it's clear. I'm going to push this one a little bit lower, and then we're behind, right? And what do I see? Well, we reacted to the supply to the left. We broke internal structure to the downside. But at this moment, what did we do? Well, we failed to break this demand range. And if I refine this a little bit, just to the concentration of where the candle bodies are, and let's say the extreme wick, right? Something like that. I can drag this all the way across until I want to see that once we've passed through it, right? So at this moment, what do I see? Well, this supply pushed price lower. Now, this supply was not strong enough to take out this demand initially, and we did get a reaction. And this reaction shows me what? Well, we formed an extreme. This extreme did not break structure. It did sweep liquidity internally, right? But it did not break any external structure. In fact, all it did was mitigate the equilibrium, the absolute 50% exact of this previous wick supply, right? So that tells me that this area is a strong opportunity for sells if price were to come back in here. And we're going to say this is a nice supply range. Now I could refine it to different parts of this, right? I could do the last part that got engulfed, which is what? Buy to sell wicks, right? And I could refine down really low down to here. But in this case, I'm going to keep it up here because I don't really have the most clear point of interest on there. And we could react to anything in the leg. So for me, we're going to keep it like that. Now, you're asking me probably, what the heck are you doing? Why are we marking out weekly levels at the extreme of a leg that are 700 pips above where we currently are? Because the idea behind here is to refine as much as possible. And you want to make sure you understand what's happening, right? I'm going to grab this tool. And now that I see on the weekly that this is my latest swing from this high to this current low. Now, we've had a pullback. But until this low goes, this is the absolute extreme of that leg until it changes, right? And I could do that. Now I could refine because this one already was mitigated and this one is not mitigated. We could say that this is the weekly swing leg to the downside. Now we did have pullbacks, and on a daily time frame they'll be more clear, right? But on the weekly, if we really take a look at price, we don't see too many clear accumulations or distributions as we did prior. We can see price is pretty weak, but from that high we have this low and we get a pullback here. This area breaks structure downside, we make a low, we get a pullback here, and from here we make a new low, break structure downside, we make this high, we break structure one more time, and currently we are sitting at what? Relatively equal highs. And so now, and if you use that tool, it's a lot more clear, you can see that we've had a couple pullbacks. And each one of these is going to provide an area of ample supply that we should be considering that potentially in the future we could give a reaction to. One thing that I use is the inside bar tool. Now, is it an indicator? Maybe not exactly, but I'm going to show you in case you want to use it. This is what it is. You can find it on the indicators. And all this is going to do is show me a lower time frame range. An inside bar is classified as a candle that does not make new pushes to either the lows or the highs of the prior candle. When you see a very big candle, usually the following candle is going to be an inside bar. And what that really means is that we developed a range in there. So usually after a strong expansion of price, usually price kind of just chills for a little bit. And when we see a buildup of price, usually that's something that we come back to tap, right? So anyways, if you looked at if you're in Discord and you use my previous cheat sheet, right, this is what we're looking at. Let's see if I can open the original here. Let me pause it for a second and open up the document so you can see. Alright, so I opened the document in Discord. So this is from one of my last videos on market structure. It goes really in depth on this. And this is something that we could use for this current video. So if you look here, we have the definition of flips, the way that I use them, right? So when we tap to a demand level here, the reaction, if it sweeps liquidity and then it breaks the initial reaction, so reaction swept liquidity and broke structure and continuation, I would like to enter at a mitigation of the flip. Now if it does not sweep liquidity, more than likely that actual area will be used as structural inducement and will become liquidity and will tap a higher point of interest that's more clear. So the reason why that's relevant is because what did we do here? Initially, and we're going to go on the weekly time frame from the weekly to the daily, but in this time, this is what we're looking at. Price tapped the equilibrium of this demand range, right? We formed an extreme, and this extreme did not really take liquidity. Maybe it did on a daily time frame. We did get a little bit of sweep. So, in this case, let's count it, right? It is kind of clear. We do clear internal structure, nothing external, right? Which makes sense because we're still in supply. So for me, this one's valid. But then what do we also get? We're still technically, just this reaction doesn't mean that that's the only reaction of demand. We can actually get multiple reactions. In fact, we get a much deeper mitigation, probably comes into the extreme of the demand leg. And so here, what do? We form another extreme, we give a reaction, another flip, and this one does what? This one, while maybe it takes internal liquidity, it doesn't take it didn't take the previous swing that pushed price lower. So this high broke structure to the downside, probably on the daily time frame. We got a reaction push back up, we mitigated, created relatively equal highs, and so what we've done is we've confirmed that supply is holding. And then we've broken structure to the downside. So for me, this gave our last reaction. And so this is also another level that to me is valid. So what am I going to mark out? I could take this buy, but what I see is this supply inside bar that has yet to be mitigated. So for me, that's an area that I'm really attracted to paying attention to. And this one did what? Break structure. This is an unmitigated flip. Tap, pushes up. What does this do? Might take some internal liquidity. Doesn't really take this high. So in that case, maybe it's going to be like in this condition, right? Where the second option where we tap, give a reaction. Maybe we don't do any sweeps, but we break structure. So this could actually serve as inducement for me. And that would make sense because on a lower time frame, what do we have here? These are relatively equal highs. That to me looks like inducement. So we're going to mark that so as inducement. And you're going to see more clearly on a different time frame. Let's see, why did that one not work? I think it might not be visible on that time frame. Give me 1 second. So I'm just going to go here and make sure that I label it as such. It's possible that that is not visible on this time frame. So we're going to make sure we change that on the weeks. I don't know why it wasn't shown. So there we go. So we have equal highs, right? This did not take the liquidity from that one, and it did break structure. So this is a flip, and in fact, the higher time frame point of interest, something above might be targeted. So for me, that's what I'm kind of looking for. But this one, nonetheless, I would expect a reaction from here. Then we pushed price lower. In fact, what I'm going to do is I'm going to use this tool, my trendline tool, to identify areas where we break structure. So here we are, we're on a weekly time frame. So where's the weekly bottom, right? So this low created this high. When did this low go, right? I classify a candle body closure below the wick as a change in market structure. Realistically, I don't see this one counting, so I'm going to look more to the right. In that case, I would like to refine, instead of this level, I'm going to use this wick. and this is the one that I'm really going to be following, because this one might have a better, clearer break, right? This one didn't really give a nice break, so I'm going to forget that one for right now, right? I'm going to use this one. So this low, this high, break of structure downside. So if I look at this on a weekly time frame, and remember on the daily time frame it's different, but we will go to those time frames. We're focused more on the current time frame. So what I see here is that this area is the extreme. Did this break structure? Yeah, this is the origin of this swing, right? So we have this high to this low, right? This low to this high to this low. Then we're that's market structure. This low to this high, right? This is the lower high, the lower low, lower high, lower low. But what actually was responsible for breaking structure is this doji candle, and this doji is on the weekly time frame, and it's actually what? It's a lower time frame range. So I actually want to see what's in there. It's not so interesting to me this level as it is, but I want to see what happened there on maybe a different time frame. So I'm going to do, it's a weekly doji, and what? It got engulfed and it broke structure. So we're going to just drag that out across. That's what I'm going to look back for at later, right? So this one was responsible for the break of structure. It's the decisional. This is where we decided we basically gave commitment to break structure. Now, probably what happened is that we gave a reaction to some sort of demand, and that's what formed that. But we're going to see that later, right? So we broke structure downside. Let's find the next low. The extreme low, we get a pullback. This is the pullback. Tapped the bottom of that range. And then what did we get? Where did we break structure? We look to the right. This is a weekly level. Bottom. We broke structure to the downside in an engulfing manner with this candle. And so what I see is this. Now, you might think, well, is this a good mitigation? Well, think about it like this. What's the higher time frame leg that's developing? We have this low to this high, right? Maybe from here, maybe the expectation is to make a new low, right? Well, for me, this is satisfied, and I wouldn't expect another mitigation here until the higher time frame bias is finished. And the reason why is because this low created the pullback of price up into this area. And this is a supply range on a time frame that broke structure to the downside. So for me, when we tapped into this area, enough volume and momentum flowed into the market that caused this reaction to break structure to the downside. So for me, the somewhat mitigation of the bottom of that range of the doji is satisfied until we finish the higher time frame intentions. There's no reason to come back to these equal highs until we break structure to the downside, because we already confirmed that it's valid by the breaking of that low. If this structure had not gone and we made those equal levels, for example, let's say this is what happened, right? Equal levels, tap. Well, let's just say this happened. Then I would very much expect price to probably sweep those levels before continuing. But because we immediately got a broke of structure to the downside, like this, then what that means is it's valid. That's enough of a mitigation, and the inducement up here is saved for later use. And in my market structure video, I go over that. We will leave a lot of areas for later use. Sometimes we will not even tap them until we retrace on the higher time frame. We'll leave these equal highs for later use. And you can get this in the Discord or in my last video, right? So anyways, let's move on so we're not on the daily or the weekly forever, right? This doji candle for me is where we decided to get commitment to break structure to the downside. So for me, I'm going to label this as a weekly doji that what? Got engulfed. And for me, the engulfed is just a sign of very strong momentum and volume that entered the market there that I want to refine, right? And now let's go. We have another low that broke structure. This low, pull back to this high. Unless this high broke this supply, there's no change in character. There's no shift bullish, right? Because this supply created this low. So in order for price to go bullish on the weekly, this supply has to go, right? So currently, what's the most recent move? This weekly bottom broke. So because that weekly bottom broke, now I'm looking for the strong supply that broke it. Now I can take the wick or this entire candle as the supply. Now that might be a little ridiculous, so I'm just going to refine it to what? We're already there. I'm just going to go with the wick in this case, because that's a sizable enough wick. So I'm going to say wick extreme. So W extreme wick. It's on the weekly. So that's what we have. So anyways, now what's the expectation? The expectation is what? On the weekly time frame, we are continuing to leave behind supply, and we're continuing to break structure to the downside, as you've seen. So my expectation is that this supply has to hold and that we get that, right? That's my weekly bias. So now that I know that the weekly is bearish, and the only time that I can change that is when this supply goes and we get a candle body closure above this, which could take a whole week to develop. So I want to really narrow down and see what's happening on the daily time frame to have an idea. Now you have this on your screen too. If you go to the bottom right, you have an object tree. This object tree allows you to organize everything that you're doing. So I'll click on the top one, I'll hold shift, and then I'll just scroll down to the bottom and tap. I'll double click and I'll create a group of these drawings. And so now I'll double click and rename this as my weekly. And I want to know what these levels are because I'm going to refine them, right? Now, anything that happened prior to that leg is not important to me because I'm only trading from this leg. So I'm going to delete all of these extra things that, you know, they're just not relevant to price right now because they're on the weekly level. So I'm just deleting all these things. And I'm looking at this most recent leg. This one is already mitigated to the equilibrium, so it's unnecessary for me. So I've cleaned up my chart. So now the idea here is we're going to simplify this a lot. So we're going to go down to the daily time frame. And from this daily, we are going to do point of interest selection and refinement on the daily from the weekly. So the weekly is refined down. So I'm looking for candles that get engulfed that break structure to the downside, right? So we have, what do we have? Low, we have a higher low, higher high, higher low, higher high, higher low, failed to make a higher high, and then what do we get? A lower low. This is where we're getting that shift, right? Now we're getting this shift, and what do? We break structure downside, come back and mitigate the entire candle, right? Then what do we get? Now we have another area, we have this supply here, right? Now we make this high to this low, price comes back, mitigates, taps that, and then breaks structure downside. So to me, this mitigation is basically satisfied because we've already tapped it and broken structure downside. Enough volume and momentum entered the market at that reaction that we continued. And look at the reaction we got, a massive engulfing candle. And now I have all that. How do I classify a shift in market structure? I, for example, will see for a failed creation of an expected level and a shift in momentum and break of protected levels. This should have been a protected level because we were expecting higher highs. But now that we've shifted, to me, this is the area that's currently unmitigated. And it's on a daily level. So we're gonna define this. So this is a weekly extreme, right? That's unmitigated. And I'm now refining to a daily doji that's engulfed, right? There we go. That's clean. So now what am I gonna do? I'm gonna look a little bit below. Now here we can see what? This is what we drew on the weekly, and it's very clear. This makes a lot of sense. Maybe we'll even, I'm going to add it to make sure I can see it on the daily too. So I'm just going to duplicate it and add it on top, right? Works like that. That's fine. So what do we have? Equal, we have equal highs, and this is potential structural inducement for later, right? So this area is an extreme, and in my eyes, what could I expect? I can possibly expect this to come back and be mitigated. And we're going to see why. I'm going to explain to you later. But this will serve as inducement to come back to later. So if price came back up to this area, we could expect price to target liquidity, right? And this area is just below this point of interest to where we can get continuations back down if it's a strong level, right? So far we failed to break the lows, but we're currently weekly bearish, and it looks like we're daily bearish. So let's continue refining. So here we are. This is satisfied. I'm looking for the area that got engulfed. So here we have what? A sweep down, we have a sweep of this candle itself, and then we have this buy candle that looks like it has a little body in here, but enough to develop a range and then break structure downside. Well, I'm going to explain. It's incredibly important to understand what's happening. So I'm going to justify the reactions that I'm seeing. First things first, look a little bit left. I see this point of interest. We have this high to make this low. This is a valid pullback. This is about 95 pips. This is something that I'd consider, it's just shy of 100 pips for me. So this is something that I'd still consider valid. And that breaks structure to the downside, 140 pip drop. So to me, this area should have been protected. This should not be violated. In fact, my expectation would have been that if we did that, then what happens is we come back, tap that level, and continue. There's no reason to have taken it. The only thing is, what did we do? We took this level, we swept it, we took structural liquidity, and what did we do? We created equal highs. This is going to be something to take back later. Now, what do we see happens as a result of this? Well, this is still a strong supply, and we're considering that because it broke structure, and that's the key here. So I'm going to drag this across, and I really want to understand what's happening. Price came back in a corrective pullback that I'm expecting to what? On the lower time frame, right? I'm expecting to hold. We get a reaction on the daily. We get a candle body closure, a sell candle that shows me that we should continue down. And then what do we have? It runs the supply. It breaks structure to the upside. So to me, what is this? Now this area is a demand zone, and this serves as a supply flip, right? Same thing. We look back over here. We have what? In the supply, price came in, gave a reaction. This would be the upside down version of that, right? So we give a reaction, form an extreme. Do we take liquidity? We break structure, mitigation, right? So my expectation is what? We tapped, we formed an extreme, we break structure to the upside. In this case, we break internal structure or structural liquidity because this high went, but we failed to break this swing high, this previous one, and we just left behind inducement for later use. So what do we have? Now we're expecting this area to be potentially strong, but also weak because it failed to break this level, but it did break this level. So we're kind of waiting to see what's going to happen. Price comes in, wicks, taps, and enough buy orders are triggered at this moment that we leave behind such a long wick and such a tiny candle body closure. So this to me shows that buyers attempted to buy up all the liquidity here, were triggered in and decided to buy price. Now the question is, they really weren't strong enough to break structure because the reaction here did not break structure to the upside and did not take that inducement. So what that tells me is that this reaction was weak and this will go. So when we tap here, what do? We just sweep the previous candle. It's an entire day's worth of liquidity, right? And what do? We get eventual failure of this demand zone. So I have two levels. I have this area that swept liquidity. I could use that. And in fact, I'm going to refine it just to the candle just after that, which is a buy to sell that gets engulfed. So this one, this one right here is a candle I'm interested in. This is a daily buy to sell that gets engulfed, right? So that's what I'm looking at. I'm going to drag this across. And then what else do I have? Well, I actually have another reaction to this demand zone, same as last time. We're going to have multiple reactions, and each one can be valid for a different reason, right? We tapped into the extreme is what it looks like, and price did what? On wicks on a lower time frame are going to be candle bodies. So we tapped into this area, buyers entered the market and they bought price back up, the day closed, a new day opened, and continued to buy price higher. Once we tapped this level, what did we do? This is the formation of an extreme. This is the extreme of that reaction. And this didn't break structure to the upside. So to me, that's what? Still weak. But what do we have here? This is a area where we formed an extreme, broke structure to the downside. So we're expecting mitigation of this level and then potential continuation, right? So if I look here, that's what the flip is, right? We tapped, we give a reaction, we take some liquidity on a lower time frame, we break structure downside. I'm expecting a reaction back to that range, to the extreme, right? Price does that, right? This area here is also the flip, so we're gonna just mark that as another flip, right? So demand flip, right? We tap the supply, form an extreme, invalidate it. Comes back, taps the demand, gives a reaction, invalidates the demand, right? Leaves behind a supply, right? We've come back down lower, and then what do we have? We have another point of interest that we've given a reaction to. Now the extreme. Now, what could I use? I could use this engulfing candle that's, well, not an engulfing candle, but a sell candle that's very full bodied, right? I could use this. This is a pretty big candle. Now, this is a valid reaction, demand zone, that did break structure, so it's technically a strong level, right? The question here, though, is, can I refine this a little bit? In fact, we have what? What area was truly engulfed? Well, we have wicks here, and these wicks are basically what? Sell to buy engulfing. So I'm actually going to go with this candle that gets engulfed, and that's how I'm going to refine my point of interest even further, right? This area is really what I'm focused on, that sell to buy that gets engulfed, the little wicks in there. So now I want to see, did we get another reaction here? And it looks like we created another flip. This is a demand flip. What did we do? Price came into this point of interest, tapped. Here we have an interaction between buyers and sellers. What did we do? We created a supply range. We have buyers and sellers going to war, trying to figure out who is stronger than the other. In this case, the sellers win. But we have a full body candle almost that closes very strong to the upside. We do tap this supply, and this supply is where we get more momentum to break structure. Once we give that reaction that somewhat mitigates that supply, we get the push lower, and that's where we get confirmation of the break of structure of the weekly. So this is a very valid area. Now, can I refine this? Possibly, maybe even to these wicks more, right? But the reality is that it's not a very clean level on the weekly or on the daily, right? So I'm going to leave it as it is, and I'm just going to wait and see what happens, right? So anyways, let's move to the next area. We come down, this is the high, this is the low, right? What do we have? We make this low, price pushes up, and you can see that what do we have? We have almost what looks like sponsored candles that take liquidity, mitigate to the left, which is what? A weekly doji that got engulfed, and is what? It's a flip zone. Gave a reaction, formed an extreme, broke structure downside. We're expecting an entry at that mitigation, same as here, right? We gave that reaction, and then what? This is somewhat mitigated. Now, is it valid? Yes, because it broke structure downside. So in my eyes, it's already enough, the liquidity that we received from this initial tap. We tapped this, and enough sellers came into the market that we got an engulfing sell candle. They came back to what? Tap this demand, right? Now we're justifying every reaction. You don't have to go so in depth, but look, imagine how much better you'll understand price. We gave a reaction, we came down and we swept the lows, right? But we didn't break structure yet. Came back up, tapped this area, which is what? The sell candle that swept the lows. And look at this, we have a doji candle that got engulfed. In fact, this entire pivot up, this push up of 3 days worth of candles all got engulfed. So to me, my point of interest refinement will be this one. So I'm going to drag this right, and this is what? Another daily doji that got engulfed. Forgive my spelling. I wish they had Grammarly for this one. Engulfed, right? And this is a supply, so I'm going to have to redo that part. So supply, and then daily, doji, and engulfed. And the reason why I'm marking these, what they are, and I'm really describing them here, is because if I'm on a different time frame, like let's say I'm on a 30-minute or 20-minute, right? And I'm like looking through here, I don't want to just look at a level and wonder what the heck it was. I really want to understand it. So if I can describe it and say, oh, it's a daily buy to sell engulfed, I don't have to go back to the daily to see what it looks like. I already can get an idea. I remember what it is because I've described it, right? So that's how I like to do it. Now, you can do whatever you want, but for me, that's a really good tip. Now, what's the next point of interest? We're refining down very quickly, right? So here we have this low, this high breaks that structure. So this is a protected supply. In fact, this is the extreme. So what I want to do is, now that I'm on the daily here, I want to drag this across, and I'm going to refine the weekly. So for me, this is as simple as being a daily extreme that causes break of structure. Let's not forget that E, right? We'll drag that across. Now, on the weekly, what has to happen? For this to close weekly bullish, this supply, which is structural, right? Because this high broke structure to downside. So in order to get a bullish change of character on the weekly, on the weekly, we have to have a full candle body closure above this high. On the daily, same thing, but it's more refined. Full candle body closure above here, right? Pretty much. So, because that's the most valid supply. Now, what we could say, and that's the extreme, right? But what I also think about is when I'm looking at price, what area actually caused a break of structure, right? So if I'm looking here in this area, that there's a lot of price movement from November all the way to, you know, to January 28th when we finally took the low. All this was doing is what? This is a buildup of manufactured liquidity. We are constantly mitigating the demand levels and leaving no unmitigated levels. And the reason why is because this already has given a reaction to every demand. Therefore, we will find no resistance on the way down. And that's exactly what happened. We swept all this liquidity. The only area that was previously unmitigated was this area that caused a break of structure to the upside. And what did we get here? Well, this is a demand. We can do this entire candle, drag it to the right, or we could refine it a little bit, just more to the extreme. Let's just go to the wick, right? Why not? There we go. And what did we get? Broke structure to the upside internally. This should be what? This should be technically considered a strong demand because it broke liquidity. It took internal structure, broke structure to the upside. Now, what else are we looking at, right? Well, there's a couple things we could look at. Because this area broke structure to the downside, right? But where did we get commitment from? We got it from here. Now here, what do we see? We have multiple reactions in here, but which area was a counter to the sells, right? We have a strong buy candle here. So this is a pretty big range, right? But this area still gives us what? It looks like maybe it gave us a flip, right? So let's see why. I'm going to explain to you what I'm seeing here, right? This is a strong demand level, or actually, yeah, so this is going to be supply flip. Let me label that one right. So here we are. So this gave a strong reaction to the upside, and it was previously unmitigated. We had this high, price came back down, we tapped, we formed an extreme, did not take liquidity on the daily, which means what? Well, if we look back at my chart, what happens? When an area gives a reaction, does not sweep liquidity but breaks structure to the downside, we can expect this reaction to be served as structural inducement, structural liquidity, and be taken with the next valid level would be the higher time frame, let's say extreme of the move, the one that prior to that. And what did we exactly get? Look, where is price currently at? Did we sweep it? Maybe we tapped a little bit above it, but it's still holding. We're getting a reaction that's pretty bearish right now. We still don't know what's going to happen, and that's why we don't have a bias. We do reaction-based trading, right? So anyways, formed an extreme, did not take liquidity, but we broke structure to the downside. So to me, I want to see, well, what happened after this? Price came in and did what? Well, it doesn't always have to be a bunch of candles. The wicks are just as valid as I keep showing you. What do we have? Price tapped, came exactly to the equilibrium of that level. And what did we do? Enough sellers tapped into the market, enough volume was flowing into the market that upon the tap of this zone on the daily, we get a pushback, and the wick is basically being eaten up. Sell, 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 and then candle body closes. Here, it's a buy candle. The next day opens. Here's where the candle opens, and guess what? Still sell, 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 and we formed an extreme. This extreme does not do what? It does not take any liquidity. So what is this? This is another flip, same thing, but this one doesn't take any liquidity, at least not on the daily time frame. Now on a different time frame, we might have something different, but remember, the time frame we're doing our analysis on, that's the one that these areas matter. I don't want to say that it's going to give us a reaction on the 4-hour, because if it doesn't, right, we're going to be looking for something that doesn't happen. I mean, think about it. Look at these weekly levels. How big are these, right? And look how we're refining so clearly, so clean to one specific level. And if we can't, we won't touch it. We're going to wait to see if anything is valid at those levels on different time frames, right? But if we don't see it, we're not going to refine it. We only will refine what makes sense. the POI is so clear on these daily time frames for this level, for this level, for this level, and for this level, right? So I'm not going to make up something that I don't see. So this area is what? This is actually the first demand we're actually seeing now. This is actually a flip, and I'm going to mark it as so. So this is what? If we look at this, it's a sell to buy that's engulfing. So first of all, it's a daily candle. So I'm going to do that. And then it's a sell to buy wicks, right? And I'm going to also remember that it's a flip. So I'm just going to drag that out across, right? And then what's the other thing that we want to think about? Well, there's always the extreme. We don't know if it breaks structure to the upside up here, right? But what did we do? We took out this structural leg, right? The actual area, the decisional. This is where price decided to commit to making a new low. Because prior to that, this high, all it could have been is just what? It was strong enough just to push price back into previous demand. What that really meant was there wasn't enough buyers to take price higher, so I had to come back to previous strong unmitigated demand. We did that, we failed it, right? We created a flip, and now we have the extreme that's unmitigated, right? The extreme is always going to be valid, and we're always going to be looking at that. Now, if it breaks structure to the upside, it's even more valid for us, right? So this is daily extreme, right? Now, one thing that I wanted to point is, what did we have? When we are building, when we're breaking structure to the downside, right? Or even to the upside, whatever happens. Let's say the low that creates the pullback. The reaction that we get, whether it's a low momentum break or a high momentum break, that's going to matter a lot. If this was the low and we get a low momentum break, right? Usually that means what? We might come back to decisional. We just need a little bit more liquidity. But when we get a very high momentum break, what does that mean? In fact, if you watch the market structure video, we have that here, right? A low momentum break, like this, right? This is just an example. We get a decisional retest. A high momentum break gives us an extreme retest. You can see the difference, right? Now, why am I pointing that out? Look at this. You might not have seen this because who's looking at the daily levels, right? This is a very high volume momentum break. We have this low, we have this high, and from this high we have this low. This was all we needed to break structure. Now, if you look previously, what do we have, right? This low, this high, this break of structure. Is this high volume? Not really. Look what we come back to test. The decisional. This is a flip where price decided to commit to break structure. This, all that this did was what? There wasn't enough buyers, so we had to come back to what? The extreme. Here we decided, are we going to push back or are we going to commit? This was the decisional. Break structure to the downside. Come back, tap that decisional. Here, what do we have? Technically, this is the extreme. All this is already mitigated as we break structure. And then what do we have? This low, this high, this is the extreme, and it breaks structure to the downside. This is a massive leg. This is several times over the entire size of this, right? So let's say this is what, 160 pips? This is like double that. So for me, using what I've learned, this is a high momentum break, and that means the extreme is going to be a retest. And what does that tell me? More than likely, this area could actually simply be used as structural inducement. And we've seen that a couple times happen. We've seen that here, right? So anyways, the most recent leg of price is this swing high to this swing low. So I'm just going to map that out with these little tools here, that little curve tool, right? And this is a strong high that broke structure. But the previous leg shows a very high volume break. So I'm really expecting price could be bullish. Very likely it could, and this is where I want to see price come back to. That's where we decided to break structure, but this is also the extreme as every other part of the leg was mitigated, right? So keep that in mind. I'm sorry this video is so long, by the way. I understand that it's probably annoying, but this is what it takes to really understand price, right? So we've already done what? We've already basically justified all the reactions we can see. So now I'm going to go to the right, and I'm just going to label everything else that I've just marked up as my daily. I want to make sure that I separate these because I don't want so many lines on my chart, and I'm going to show you why. Right? Look at this. Let's say if we looked at the weekly, this is our weekly chart, right? This is what we were looking at, and we've refined. Look at how much we've refined too. Now these are the daily levels. Look at how tiny that is. We've really refined exactly to what matters. Now look, what is the daily? Remember I mentioned about buy to sell wicks? On the weekly, you don't notice this. I just did the entire supply range because it wasn't clear. But look, on the daily, this is a buy to sell engulfing. It's a doji, right? Same thing. Here, look at this. All of our refinements are inside the wicks. And that's why the wicks are so important. Never neglect the wicks. That's where all the secret refinements are. That's the sauce, right? Once again, now we're on the daily time frame. Look at the difference. Supply. These are the supply levels and point of interest that we're looking at. Now we're filtering and selecting the higher time frame point of interest that are more valid and more clear. Look at that. We've cleaned up our chart. So now we're done looking at the weekly. We've refined down to the daily, and we're going to now focus on the daily and refine that. So anyways, now that we have this, is there anything we missed? I don't see anything. So what I'm going to do is I'm going to go down to the 4 hour. But before that, I mean, we could just take a peek. What's the 12 hour? Look at that. The 12 hour looks like pretty clean here. Here we see a full-bodied closure at the bottom of that cell, but we still have wick, right? Not the cleanest. Here we have a 12-hour doji. You know, price is kind of looking a little bit more clean on some levels. Some levels a little more confusing. Here, look at this. This is a buy to sell that gets engulfed. Very clear, right? Let's go to the 4 hour. Here, what do we see? Wow, look, even more clean. Here we have two candle bodies that are bullish before we have the sell. So now we're going to refine. Now, remember, each time that we're refining down, we're looking at a new leg of price, right? At the beginning on the weekly, you know, the leg of price that we were focusing on is from this high to this low. On the daily, the leg of price we're looking at is what? We're refining those levels, but then we've looked at this leg, from this high to that low and this high to this low, right? Now that we're on the 4 hour, we're looking at just this area. That's the only area we're really focusing on, because where are we at right now? We're currently in this level. So we have two options. Price is either going to break out and come back to this area, whether it invalidates it or it reverses here, right? Or it's going to come back to the demand. Now, does that mean we're trading that? Well, as I showed you on the weekly, we're not trading 600 pips right now. We're trying to figure out what's going on. This is a clean 150 plus pips that you could easily catch. If price failed this area, it absolutely will come back down here. Now, this was a reaction to news, right? We had a lot of news yesterday, and so we can bet that, you know, the reaction to news, all it did was brought price back to what? A daily supply, and it actually looks like it maybe swept it. So, you know, in that case, what's the reaction? If price dies here, we're likely to come here, and we could come back to the extreme, right? We'll see. So, point of interest, refinement, I look at this level first. This area does not look clean. I don't want anything in here because there's so many wicks. These dojis in here don't look super clean. We wick out of this area, candle body closure. Here we have more wicks. Let's see what that means, right? So what do we have? High, low, high, low, high, low, right? So let's see. There's some demand in here, right? I'm going to use a sell to buy that gets engulfed. Let's just understand what happened. Price does what? Comes back, taps, forms an extreme, gives us a flip, and this is a supply. Look at that. This is a wick. This is a 4 hour, right? Let's do supply. We're going to do 4 hour, and this is a flip, right? This is what? A buy to sell wicks. Now, is it going to be super valid? Not necessarily. It's not the area that I might 100% go for, but it is more clean than this area, and this is an unmitigated flip. We formed an extreme, did not take liquidity, broke structure downside, so probably could be swept, but I'm just looking at it. We'll see if we like it later, right? We could change our minds. We're not married to any ideas. Remember, we don't have a bias yet. We're just developing our analysis. The weekly and the daily are bearish. Let's figure out what the 4 hour is. So 4-hour legs of structure, what do we have? Low, high, low, high, low, high, low, high, low. Wow. So a couple things. This was a buy to sell. And so for me, this was a strong supply that broke structure. This is a decisional area. So in fact, for me, this high was the 4-hour area that when breached, we gave a 4-hour change of character, a shift from bearish to bullish. So that tells me a lot. That means that we had some strong buyers in these areas to commit to price to violate this. Now, what else did we have? We have this flip zone on the daily time frame that we could also refine. What's at the equilibrium? Look at this. Look at this very clean doji that broke structure to the downside. In fact, it also broke out of this range of the reaction. Here we flipped. This was a deeper mitigation, flipped, created an extreme, right? Broke structure downside, and then what did we do? This is a supply flip on the 4-hour. Let's drag it across and see what happened. No way, look how clean that looks. Supply flip. What else? This is a 4-hour, so we're just going to label that. And already, look how clean this reaction is. We came back, tapped. We formed an extreme that took liquidity. It mitigated an area on the 4-hour that was responsible for pushing price up. But it did take internal liquidity here, internal areas here, but no structural, right? Formed an extreme and then broke and created a failure of this supply. Look at that. We could totally expect buyers to come back in here. Now there's no structural inducement in this leg, so very likely we could see that area fails, right? But we're not there yet. We're still trying to figure out what happened. We're just refining what we see. So anyways, we now have a daily flip narrowed to a 4-hour flip. We now have what? A bullish 4-hour. So weekly bearish, daily bearish, 4-hour bullish, right? So that's important. So we know that since I like to use the 4-hour, for me to see that the 4-hour is bullish, I'd like to see what the 15-minute is, because is the 15-minute in alignment with daily and weekly, or is it the 4-hour? Or is the 15-minute in alignment with the 4-hour? Is the 4-hour going to change the daily and going to change the weekly? Well, remember, we show all of our levels. Look at that. This is a weekly level. This is a daily level. We need a candle closure here. So if we get a candle closure on a 4-hour above here, right, and we can see that we're acting bullish, we could see a daily. So we could catch a 15-minute buy, to take price higher that will shift the 4-hour, the daily, and the weekly, right? Absolutely, we can do that. So anyways, this is the extreme. The extreme is always valid, and it broke because it broke structure. So this area is a supply on the 4-hour extreme. So bad at this. Alright, so we have that level, and we're going to mark it off. We already gave a reaction, and it looks like maybe we've shifted bearish. Now, at the same time, this could be a complex pullback. We have this low to this high. I mean, we are not bearish on the 4-hour until this goes, correct? Right? Now, this is the 4-hour high, right? We have, this was the previous 4-hour high that gives us a change of character. So that means what? We break structure here, make this low, and then we continue. So this is technically the area that has to go for the 4-hour to change again, right? For the 4-hour. So I'm just going to mark that as 4-hour low, right? And so let's continue. So we refine this level. We refine this one. In fact, what can we do here? We can say that this is a 4-hour body, right? So let's do that. That could be a demand. And I'm going to show you a trick that I use here. So this is a 4-hour, and this is a full-bodied candle closure, basically. Now, it doesn't take liquidity. The wick is a little bit more valid than that one. So we're just going to go 4-hour and body is what we're going to call it. But then just below that, we also have this wick. So I want to look at the wick. And we're going to drag this out across too. This is the same thing. This is a 4-hour wick. And so that's an area that I want to refine to, because if I see a change of character on a 15-minute time frame from the body, I'm not expecting it to tap the wick. Now, if I see it come to the wick, which is the extreme of the swing, right, then absolutely I will take a trade. you know. So here we are. Above, we've refined it to this level. We have this extreme. We've refined every single daily that we see, right, so far, except the extreme down below. This is the daily level. Now, what do we see here? We have what? A low. We have, this was, I guess, a pullback where we broke structure, right, pushed higher. This is where the low was being built, and we were building liquidity. And as we were heading up, we had a very aggressive sweep. And that came down to tap this inside bar. Remember when we talked about inside bars? There are ranges on a lower time frame before some commitment occurs. So to me, this sweep took liquidity and it mitigated. So liquidated and mitigated, and it's a very aggressive V-shaped recovery on a different time frame. So for me, this is a 4-hour sweep. And that is the area that I would like to see price come into if we had to come down that much lower, right? So now we've refined everything. So we're gonna look here. Now I'm going to clean up, and I'm on the right side of my screen. I am now organizing my 4 hours, my 4 hour. So just to give you an idea here, we're looking at the weekly. Let's go back, right? And let's show you how much we've refined things. This was the weekly. This is the daily. And look how much we refined to the 4 hour. You can even see a couple things here, right? Let's go back to the daily now. And the whole idea here is, why am I looking at weekly points of interest? Your point of interest selection is absolutely incredibly important. And you can guarantee that if a level is very relevant on the weekly level and it looks clean on a weekly, then you absolutely have something on a lower time frame that you need to catch. Because look, if I was not highlighting a weekly level and I was just looking for areas, I'd pick this one, I'd pick this one, I'd pick this one, this one, this one. I'd pick everything. But that's why when I set my refinements, all I'm doing is I have an idea of where I should not get lost. Or else I would have picked this area here too, right? Now, on the daily time frame, I'm refining things. But notice we've already gotten reactions to some of these. I already justified some of them, so I can clean up. Now look at how focused those levels are. Simplicity is key to organization and success. Daily, narrow down to the 4 hour. And the 4 hour, it's only relevant on something that's more recent because we're not really that far into price yet, right? So here we are, 4 hour. We're already refining these. Now what I'd like to do is I'm going to drop a couple of time frames. I'm going to go to 3 hour, just see if anything's clean. This looks kind of clean. Looks like almost like a 3-pin, right? On the 4 hour, it was what? Tweezer, almost tweezer tops, right? Here we have one long wick. Let's go down 2 hours. Here we have, this looks pretty clean on the 1 hour actually. This is a buy to sell that got engulfed, right? So actually, I think I can do something with this one. So I'm actually just going to refine this to a supply. And this is a refinement. I'm going to say 1 hour buy to sell engulfed. And did it break structure? What we're going to see. We're going to look at a different time frame. So that's the 1 hour. In fact, you could even refine this 1 hour to up here and clean it up a lot. But we don't need to do that. We don't need to go that specific. We're going to go, oh, that's a 2 hour actually. So what's the 1 hour? The 1 hour we could actually refine to this inside bar, right? Let's focus to that one. So inside bar, that is unmitigated. Remember what we talked about, that when there's a range, after some expansion, we have time to cool down. We're going to chill in a range, and in this case, we left an inside bar that has not been mitigated, and it did break structure. We have a wick here, buy to sell wicks that got engulfed. So this area hasn't been mitigated, so I can guarantee you price might have to come into there. Now, we've tapped the bottom of the range, and maybe we don't need to, but we're going to verify if we need to do that or not, right? So I'm just going to drag these out across a little bit more because I want to make sure I understand where price is coming from, right? And then we have these areas here. We're just going to narrow it down a little bit closer just to keep it clean for the sake of easily finding our point of interests. Here we go. Let's do that. All right. So now we're on the 1 hour. We're going to actually look down to the 15-minute. 15-minute, this is all we're looking at. We're not going to get too confused because 15-minute structure here is relevant for the most recent areas. So here, let's make our highs and our lows. So because we're currently we're currently bullish, right? It looks like we're bullish, right? The weekly is bearish, the daily is bearish, the 4-hour is bullish, the 15 minutes bullish, because this is the high, right? Drag this all the way to the right. When do we get candle body closure across? Top. Here, this candle right here, we get candle body closure above, and then we continue, right? So what do we have below? Well, we have the low, this high to this low, right? That also mitigated this area, right? We could drag this out across, right? Now, what happens after this? We have this area that caused price to move higher. So this looks like one swing, this low to this high. We could just refine this and call it a little demand zone, but price doesn't really do anything into there, right? What do we have the break? Here we have a sell to buy, price pushes up higher. Let's see where we have another high. So from here, the next high is this one or this one. We're gonna go with this one. And the reason why we're not using this one is because on the 15-minute, we want at least 14 pips, and this looks to be 10 pips, so it's a little bit too little. So in this case, we get a pullback from here down to here. That's about 30 pips. So this is a valid high. And I'm dragging this across. This is a 15-minute top, right? And so what do we have? Technically, we have a demand here, right? And we could draw out a demand from the extreme wick, right? We could say that this is the area of demand on the 15-minute medium time frame, right? Because this was the origin of the break of structure to the upside. And here we have this area. We could say that we have this candle selling to buying, and this mitigated the bottom or the top of the range, right? Broke internal structure to the upside, or well, technically swing, right? Pulled back, right? Mitigated again, pushed up. Here we developed more of a little range, but then buyers came in and pushed price higher, right? So this area was a 15-minute high. We have this pullback. This low breaks structure to the upside. So look, we're going to say that this is our 15-minute extreme of this leg up, right? We also have internally this little leg, this high that's broken, right? It's not something that's super relevant, but you know, let's look for the next leg. This low to this high breaks structure. Is this pullback relevant enough for us? Is it 14 plus pips? It's about 17, 18 pips. Very valid for me. So I'm going to mark this as another 15-minute high. So we have 3 15-minute highs. This one, this one, this one, right? So what caused this high to break? Well, this is the extreme low. So let's just go, we're going to use the body because we're very refining to this area right now. So what do we see here? Well, this area, and we can mark this off, make sure we label everything because we want to exactly understand what these levels are, right? 15-minute. We don't have to say extreme. This is very close range price, so we're just going to be clear with it, right? And let's see if you understand what's happening here, right? Here, this breaks structure to the upside. We make this high and we have a valid pullback, right? This, we make this low that gives us a reaction, forms an extreme, breaks structure to the downside, takes out that demand, whatever. We get a reaction here that does what? This is a supply that creates what? A reaction, forms an extreme. Let's just say we're going to use this to this wick, right? We can drag it out across. You can even decide to use the candle before that. And look, we do get a reaction. It's all about refining things until you see what they interact with. On the lower time, you can also, using ranges, just go like this and use the entire sell to buy pivot, right? But that's why you have to be a little bit more like focused on where you think price could be focused on. In this case, this entire looks like almost like a doji, but it's not truly a doji. This is a sell candle before the engulfing. So we could say that what did we do? It looks like we are building manufactured liquidity. Once again, what happens when we mitigate every reaction? We create what? We create an area that's already been mitigated, that's already already invalid. We basically have an area that has no resistance upon a sweep. This area broke internal structure to the high, got mitigated, broke structure, on the 15-minute, pulled back, tapped into this one, top of the range, broke structure again, valid, right? This is the 15-minute high currently, right? Let's just label that here. And then what did we do? We created a supply up here that broke structure to the downside. And it did so with so much power, we took 1, 2, 3 levels, right? And which of these levels were responsible for actual structural breaks? Well, we have technically the extreme, and then we have this one. So in fact, we could say on the 15-minute that we have a change of character from this one, and we're going to go like this. 15-minute change bearish, right? This low, this high to this low to this high, break structure, right? That's one. We have this one, right? This low, pull back. Here we have the, we bring back, we mitigate, and then this is where we break structure. So we could say the extreme, right? But we could also say the decisional. So we have two areas that were responsible for breaking structure. We have the decisional as well. So we're just going to go ahead and just label all three of them, right? But two areas of structural inducement were taken, two protected lows that created new highs. So look at that. Now, once again, as my lesson shows you, here for market structure, what I don't like to get stuck in traps. When we just take liquidity from one area, we could easily shift. But when I see two areas that are responsible for break of structures, right, that get swept and taken, that's structural liquidity. This is one protected level that took and broke structure to the upside. It's strong. This is another area that broke structure, took liquidity, and is strong. When we see two strong levels of structure taken, two protected levels, we've officially shifted bearish. So to me, we broke structure. Now we also came down and tapped the extreme, and what did we get? A reaction. This reaction did what? Failed to take liquidity, right? Created what? We're doing a flip again, and what does this flip look like? We give a reaction, fail to take liquidity, and we break structure to the downside. This high breaks this low, and now we've confirmed bearish. At the same time, what do we have? An unmitigated extreme that is responsible for this break. We have a couple things here, right? On the 15-minute, and let's see if you'd spot these. Maybe you wouldn't have, right? Supply, this area, this is the extreme, 15-minute. And we're going to say extreme. Extreme is always valid, right? This area didn't actually break structure. What happened from this area though? This pushed price back into what? The demand that pushed price higher. What did we do? We gave a reaction. We formed an extreme. This extreme took the liquidity from the previous candle and then what? Broke structure to the downside. We have a flip. So we're going to take that low, that reaction to this high, and we're going to draw this out across. And look what we've done. We've seen a flip reaction here. And this could potentially be what? This served as inducement maybe for this reaction. Maybe that's just enough. Now this was after an FP on Friday and less volume at the end of the day because we've already had massive reactions. So what happened? Price really wasn't doing too much. But to me, it's looking like we might already have shifted, right? So let's look on the 5-minute because this one's already a little bit clouded with a lot of data. But before that, I'm going to make sure I mark my areas here and label everything as a 15-minute zone, right? Because I want to make sure I know what's happening. I'm going to go down to the 5-minute. And look here. Price looks very clean here. What can we see? Now we see a better, clear picture of this, right? This low was the extreme for the break of structure. This was the decisional for the break of structure. This was the extreme for this break of structure. This area did what? This was a pivot buy to sell that got engulfed, came to tap this demand. We formed an extreme that took some liquidity internally, right? And then we broke structure to downside. Price gave a reaction to demand. This is a pivot. This area failed to take liquidity and therefore structural inducement. It's going to be swept. Once we broke structure to downside, we swept it. We've tapped into this area. And now what do we have? Well, on the 5-minute, we could look at a couple things. Where do we have clear pullbacks? We have a low here, break structure to the upside, a sweep. I like sweeps. Let's draw this one out across a little bit, like that. This low makes this high. We get a pullback to a new high, right? So what's the expectation? These are 5-minute levels. I'm going to do 5-minute top, 5-minute bottom, right? Now, what's the expectation? Now, one thing that could help you is when you, let's say, do the bottoms or the tops, you could just draw out demands and supplies. I like to do that because it actually helps me think about what I should be expecting, right? Supply, this would be demand, right? We give a reaction to this demand. This demand is strong, break structure to the upside on the 5-minute, right? Taps into the 15-minute flip zone, pulls back, doesn't give us a 5-minute change of character. We react to this demand and we break structure to the upside. What do? We create a flip. This area does take liquidity, but it breaks structure to the upside. We get a equilibrium mitigation of this area. In fact, we could refine it to what? Buy to sell wicks, right? Buy to sell wicks that get engulfed. Then what? This is technically supposed to be protected. When we get a candle body closure below here, which is just after, we have an official change of character, 5-minute bearish. At that point, what does that mean? That means that this area here is a 5-minute unmitigated, let me make sure we mark it right. It's 5-minute unmitigated extreme to the break of structure to the downside. Now, here's the thing. Where do we get the engulfing from? It takes 2 candles to break this. So what you could do is you could just take this full-bodied sponsored candle, a full-bodied candle closure that leaves no wick at the top, that takes liquidity and mitigates. And therefore, what do we have? 5-minute sponsored candle tap. Now, where's the low that pushed price into there? This low to this high. To me, this is what I want to see go. This is my 5-minute bottom. This is my 5-minute top, right? And this 5-minute top actually took liquidity from these 2 areas. We have this high to this low. We have a lower high, lower low, lower high, lower low, higher high, mitigates, right? And now we have this happening. 5-minute top. So guess what's happening? So once again, on the higher time frame, to recap, the weekly is bearish, the daily is bearish, the 4-hour is bullish, the 15-minute is bullish. The 15-minute just broke, changed of character. So now we have the 15-minute is realigning with the daily and the weekly. That means that the 4-hour is soon to follow. So more than likely what that means is we can expect that the following week is going to create a bearish pullback. Now, seeing how impulsive price was, I would expect a couple things to happen. Well, on the higher time frame, we have this low, right? They gave what? A failed break of structure to the upside. Or actually, well, on the 15-minute, let's see what it looks like, right? I'm going to be clear. We have this low, this high, this low, candle body closure, yeah. So we did get a change of character again on the 15-minute, but all it was is potentially to mitigate the flip, right? So what I would like to see to confirm is that or this low that was responsible for the push of price to break structure to go. So for me, I see a couple scenarios happening. And this is how you refine price, right? If this low goes, I would like to see price melt and create more bearish order flow, more bearish structure. And I would like to see this low go, maybe get a pullback and ride price all the way back down to a potential 4-hour level, right? What could also happen is we could see price come back down a little bit and then break structure. And if we break this extreme and sweep it and break and close on the 15-minute, we could see a pullback of the demand that was strong enough to break it, and we would ride this to the next 4-hour level. So now I'm going to mark these off as the 5-minute, and we're not doing any 1-minute refining for this video today because we have very clear levels on the 5-minute and 15. But now I want to show you how crazy this looks like when we look on the weekly. This is the weekly that we started off with. Our 5-minute levels are all right in there. Everything that we've done, all the work that we've done, we've taken the weekly levels for the swing. This swing low on the weekly, right? Each one of these are, pullbacks and swings continuously, but this is one big leg of price. We've refined down to the daily. We went to the daily, right? Now we've refined to the 4-hour. The 4-hour is there. We've taken the daily off. We've looked at the 4-hour, and then we've refined down to what? The 15-minute. Everything up there. We go to the 15-minute. We can see price, the 4-hour, the 5-minute, and we refine down to the 5-minute. And now everything depends on what's happening here. When we look at everything in alignment, when we really understand the higher time frame, this is how you should do your markups. You only got to do this once a week to understand everything that's going on. For the rest of the days, what I'm going to do is when I start a new leg, a new day, I'm just going to remove my lower time frames. So like if I hit my 15-minute and my 5-minute, and then the next day all I'm going to do is I'm going to see what happened, and I'm just going to once again do my 4-hour levels if I get any 4-hour changes, right? If I get any 15-minute changes, any 5-minute changes, and I'm just going to mark all those out. But look at how clean price is. To have success is to be simple and to keep things organized. So I hope that you learned a lot from that video. That's my forecast for the upcoming week. I hope you learned a lot. I hope you decide to implement some of these things. Remember, this is how to do your pre-session, weekly, and pre-session, your Sunday markups, and how to do your pre-session markups all together. We have a lot of confluences here. If you went through the other videos and you saw the other worksheets and cheat sheets that I have, all of these things that we saw on the previous worksheets, right? That one, and then we also have we have the ranges one. All of these things we just saw used in our weekly markup and in our pre-session markup. So I hope you learned a lot. Hope you enjoyed this. Once again, if you want to join the Discord, link will be in the description, and I hope you have a wonderful trading week. Enjoy.